All right, we have a drawdown entry alert for the stock index portfolio. First, I want to show you that timing is everything. Here is the total net profit for each month in the stock index portfolio, and I want to show you how October is the best month. So if we take a look at all the months here listed, you see the total months here, January through December, and which one stands out as the best month. And it's October for sure as a total net profit. This is the sum of all the months since 2007. This isn't an average, but it's trading one contract of 30 different algorithms on the E-mini S&P and E-mini Nasdaq. And so the months overall that stand out here, I want to show you that as well, are I would say January, February, March are some good months. July, August, October, and November. And so September is just kind of one of the, let's see, it ranks as the third worst month. So the worst month is May. The second worst month is December. And so May is right before summer. And then December is kind of a holiday month. And then September is, school starts again. So these are the three worst months. April is so-so, but October-November time frame is really good. So we also have a 10K drawdown, and so that the drawdown along with the timing of the type of market that we're going to be in October, November time frame is exciting. The exciting opportunity coming up here. So you trade October, November, take December off, come back, trade January through March or April, take May off, and just take the whole month off, and then trade June, July, and August, and then take September off. And so, take May and September and December off and trade these months. So this is the time of year, if you're going to trade, if you're going to be a short-term trader, October is the time of the year. It's known for the most volatility, some of the most tradable markets. Our portfolios are set up to trade trend and counter-trend strategies in low volatility and high volatility. And so if you're going to trade, now is the time to start. And we have 1 week and 1 day left in September, so you want to get started, get set up, and get ready to go for October. And I want to show you the equity curve now for this setup. So let's take a look at the equity curve. So here's the equity curve. And you see these little drawdown spikes. Those are excellent times to start. And the first drawdown curve at the top is the dollar drawdown. This is the dollar drawdown curve. This is the percentage drawdown curve. And it gets smaller and smaller because it increases the amount of capitalization. So let's pay attention to the dollar drawdown curve. And we're trading one contract of each of 30 different strategies. And so you see these little spike downs. There's one, there's one, there's one. That's when it comes off the highs. And sometimes it goes deeper and sometimes it goes shallow. So you see these spike downs, all these little spike downs here right at the 10K area. Lots of spike downs at the 10K area. Now it can go lower. You can't be surprised if it goes down here and then comes back. This is the steepest. But we haven't had anything steeper than this since this time frame, and in the past there's been steeper drawdowns. But you get lots of little 10K spikes in this area. A good point to get in on these drawdowns. And so if an equity curve does this, and you get in, say, here, you're going to go through some... Here you're feeling like, wow, it's been a while and I haven't made any money. But if you get in here, there's no way to pick the bottom. So it could still draw down further. But I'm saying any drawdown, any chance you get to opportunity you have to get in on a drawdown, it's a good entry. It's a better entry point for starting, and it's a better entry point for risk. And so a lot of people want to get in when a strategy is hot. They go, wow, it's on a winning streak. I'm going to get in here. And then it goes through drawdown. Up, it's up. Now we're down. And then you're like, I'll just get out here. And so, but if you reverse this and say, boom, it's down, I'm going to get in. and then it goes up. Well, it's a little bit of a drawdown, so then you get a better entry point. And so this is what I'm telling you for the stock index portfolio is it's a 10K drawdown. Consider phasing in here, and consider the concept of seasonality and timing. The timing with the drawdown and the seasonality of October coming up and the history that we see here. This is the time to trade. So if you don't have a strategy, stock index portfolio is one way to set this up. This is what the TradeStation workspace setup looks like. And you see there's 30 different strategies. There are, we have 1, 2, 3, 4, 5 rows. So if you're taking a look at the rows here, there's 5 rows this way. So 1, 2, 3, 4, 5 rows. And then 6 columns, 1, 2, 3, 4, 5, 6 columns. So you have 30 strategies, and you see the ones with ES are the E-mini S&P, NQ is the E-mini Nasdaq, and we've had these drawdowns. Let's show you some of the most recent trades. So 60-minute breakout strategy. It had this losing trade right here. It's an overnight strategy. It's another strategy that can do well at night. Can get in. It's had this nice run right here. It got in, hit its profit target, got in, hit its profit target. There was a loser. Profit target, loser. And so you go through these winning and losing streaks. And Cobra 3 is one of our top strategies. Had this weird price action this week. The bulls are determined to hit those new highs, even though the selling pressure is there. There's lots of, in my opinion, there was a lot of bearish news yesterday about the China trade. Interest rates are going higher. The stock market really has gone up based on low interest rates. And if the China trade war is not there and interest rates are higher, the overnight lending rate was a surprise. So there were a lot of bearish news events this week, but the market still wanted to make new highs. And so very, very tricky price action. So you see Cobra 3, the market, this was the Fed not not lowering interest rates. It just had a quarter-point rate hike on Wednesday and didn't see any further rate hikes case by case or meeting by meeting basis. And so then the market used this sell-off to rally it. And then they push it up and then it rolls over. We talked about how the day trade trend is down. And so you have this huge move up in this short window here from 2:15, 2:30 p.m. all the way until the open of the next day, huge rally, and then it gives it all back. It goes and takes out this Fed number on the E-mini Nasdaq. The Fed low was taken out on Friday. You had this bearish news. China leaves town early after meeting. Flies back to China. Left the meeting early. So the market sold off. Was really surprised to see it hold those lows. I thought it would continue to sell lower. So there was news on that, and so the trade war resolution is not nearly like I had anticipated. Not nearly as closing to a deal as I thought. So surprised. I would anticipate lower prices next week because the fundamentals are not there on one hand, but at the same time the bulls they really want to take out these highs. They want to post all-time highs. Regardless of what the news is, regardless of the fundamentals, regardless of the selling pressure, they want to post all-time highs. And so it should be interesting back and forth. Overall, in a normal market, I would anticipate lower prices and a repricing, as I've talked about before. But we're set up to trade either way. We can trade low VIX, high VIX, uptrends and downtrends. And so that's the analysis for the market this week. And the analysis for the portfolios rolling into October. Excited to see some of these trades. Here was a gap continuation trade. Be nice to get out here. Maybe work on a better exit strategy for this. But this has a tendency to capture massive winners because it holds until the close, and if it closes at the extreme, then you catch the big winner. This is still a pretty big winner, pretty nice winner on gap continuation. So I'm also posting these trades to Collective 2. So if you don't want to set up all these algos, you can just sign up your Collective 2 account for the stock index portfolio, and I'll show you that. So I'm experimenting with Collective 2 setups, and so started sending these signals yesterday for the stock index portfolio for the E-minis to Collective 2. You can see that here. I started after a couple of losses, and so it was up on the day. Here were the trades, some of the trades that were sent through, and so that is the update for the stock index portfolio. And how you can get it in the Collective 2. I've experimented also. This is a more discretionary version of some of the things I do, and pretty good streak since August. You can jump in on either one of these or both of them, the Capstone Strategic and the stock index portfolio on Collective 2. If you don't want to trade for yourself, if you just want to open up an account with Collective and a broker related to Collective and just subscribe to these strategies, you don't have to do any of the platform setups on your side. All the signals automatically get sent. And again, the Capstone Strategic is a 50K discretionary, while stock index portfolio is a 30 algo systematic. So those are some of the options you have as well. But October is the month to trade, and the timing for this is ideal.